So the next indicator we're going to discuss and go over is the Stochastic RSI. It's actually an altered version of the RSI that we went over in the previous video. It'll be commonly listed or referred to as the RSI, Stochastic RSI for short. It's basically an indicator of an indicator where a formula called the stochastic oscillator formula is applied to the RSI data. Here's the formula. It's basically stochastic RSI is equal to the current RSI minus the lowest RSI divided by the highest RSI minus the lowest RSI for that time period. We don't necessarily have to know this formula and do these calculations because the charted programs will do the math for us and plot the data out onto our charts for us. So but it's always good. I find it's useful just to know how these indicators are actually calculated and created. So the stochastic RSI is typically based on 14 periods, where a daily chart would generate 14 days worth of data, and if we're looking at a 1 hour chart, that would generate 14 hours worth of data, right? We're looking at 14 candles or 14 closes worth of data. So if you're looking at the hour, it's going to be an hourly based. If you're looking at the 12 hour, it's going to be based on every 12 hours, etc. Now, as with any other indicator, these settings can be changed based on the user's preference. Some people may want to look for that 21 period, where others might look for the 7 period. Just to know, larger number of periods may give more reliable signals, but may lag behind price. It might be slower to update and slower to show those signals and those patterns that we can trade upon. Now, smaller periods may give signals faster, but they may not be as reliable, or they may give more false signals compared to using the default or maybe even larger periods, right? So it's best suggested, if you're a beginner, stick with the 14-day, and once you get the hang of that and have a stronger understanding of technical analysis and using these indicators, then you can experiment. So here's an example of the stochastic RSI. As we can see, it is different compared to the traditional RSI in that there's a lot more variance and more volatility in terms of the overall price direction and the reading direction, I should say. It'll swing back and forth from oversold to overbought very quickly, much faster compared to the RSI. Here is the basic RSI. In comparison, the same chart, as we can see, there's a lot less fluctuation and more minuscule or micro fluctuations. It'll stay within a certain range, and we can identify clear trends. Let's say from October to about December in 2020, we saw this clear trend. And then overall from January 2021 up into about April, we see a clear trend. This is an Ethereum. We see this clear trend in overall RSI readings. The stochastic RSI, it's a little less pronounced comparatively, where we do see these fluctuations. We saw specifically from October to December, we saw a different story here. Even just looking at the regular RSI, we do see this trend from the end of September going into December. General upward movement in the RSI in general. That also correlates with the general price increase observed in Ethereum from about $400, $500 per Ethereum to reaching about a little under 1,000, maybe 750, 800. With the stochastic RSI, it's a little different story. We see a lot more fluctuations and really correlating more so, not with the overall trend, but showing the more immediate swings and correlating with those. Particularly we see here, these immediate swings. Let's talk a bit about reading the stochastic RSI. So stochastic RSIs range from 0 to 100. They are oscillators. They're range bound. They're on a different pane than overlaid indicators that'll be based on actual price data. So a stochastic RSI score of 30 or lower indicates that the asset is oversold, whereas a score of 70 or higher indicates that the asset is overbought. Once again, it's important to state that just because the asset is considered oversold or overbought does not mean that that is the bottom. Prices can still fall if the asset is oversold, and prices can still go up if the asset is overbought. It's more so, I find it's more so useful for trend identification and identifying possible trend reversals, especially with these movements up and down between these different readings and different conditions. So crossovers above or below these levels, and also the midpoint, the 50 level, can indicate trend reversals. When the RSI or SRSI crosses from below 30, let's say it's at some low point, to above the 30 level, and it breaches past that 50 level, it could be seen as a bullish sign where buying pressure is building, and we're seeing a possible trend reversal. Remember, the RSIs go down, both of them go down, regular and stochastic go down when price is falling, and they go up when prices are increasing. If we're at some lower point and we break past the 30 level, that's a sign of a possible trend reversal. Breaking past that midpoint gives further credence to that. To that idea that, well, we might be underseeing a overall trend reversal and a reversal of market conditions. In that case, from crossing from below 30 and below 50 to the upside, that's a sign for a potential long entry and also to close short positions. So we're seeing a market reversal to the upside. Now, when the SRSI falls from above 70 to below 70, and also from above 50 and falling below 50, it can also be seen as a bearish sign that selling pressure is building, and we're seeing a possible trend reversal to the downside. And in this case, we want to look for a potential short entry and to close potential long positions that we have open. Now, when the center line, or the 50 area, acts as a support to the stochastic RSI and it moves towards the higher readings, it could be interpreted as a continuation of the uptrend. And the same thing when it is met from the underside. So let's say the center line is above the stochastic RSI. The stochastic RSI goes up to the 50 level and it acts as a level of resistance, and then it is rejected and falls back down. That could be interpreted as another sign of a continuation of that downtrend. Right, so these are different levels we want to look at for those: the 30, the 50, and the 70. It can vary. Some traders really put more emphasis on the 50 level, but I have found that being aware of the 30, the 50, and the 70 and how the RSI interacts at different levels, when it approaches those levels, in addition to how it's approaching price and the overall general market structure, can be very informative. So here's an example. This is Ethereum on the daily chart, and we see the stochastic RSI listed below, and we see several indications, several examples here of just overall fluctuations in the market. Once again, this tool is best used when you have a strong understanding of market structure and support and resistance, right? This is best to be used as confirmation as to what could happen based on the market itself and overall market structure. So within that, let's say we see over here. So this is in January 2021. Particularly, we see price coming from this low point, which we see occurred over here. We saw this downtrend, right? Price going into January 2021. We reached a new high of maybe about 1,500 per ETH, and we saw some sort of dip, right? There was an overall market dip. The stochastic RSI came down with it. Now at this point, we reached the 20 level on this, right? On this particular chart, it was set to 20 and 80, right? So you could be 30 or 70 or 20 and 80. In this particular case, the oversold condition was set to 20. So at this point, price fell. It hit a possible bottom, right? What's interesting here, Ethereum has not been at these prices for 4 years at this point, really, or 3 years, depending on when you're looking at it, really, the 2017, 2018 market cycle. So there really is no recent prices to look at to say, oh yeah, that's a level of support. Price came to about here to about 1,000, maybe just slightly underneath it, maybe about $900 per Ethereum. And we see that the stochastic RSI fell to this low. What's interesting here, it formed a higher low compared to the low found here, and it was a lower low compared to the one found here. So where can we see this going? Well, overall, we are seeing prices going up in the market, right? Generally, prices are going up. We're seeing higher highs, higher lows. So we're considered in an uptrend. The market structure is up. It's pointing up. The RSI, the stochastic RSI, falls to this 20 level, comes back up, and at the same time, price does continue to fall back up. And we form yet another higher high compared to the high before it. We fall back down to yet another low, a higher low, and at the same time, if we go to here, we fall right back to this 20 level, and at this point we actually form a higher low on the stochastic RSI compared to the low before it, indicating that overall momentum is going upwards, right? The stochastic RSI is suggesting that now this 20 level can be considered a level of support, and we also this is confirmed by looking at the actual chart itself, right? We're seeing these higher highs and higher lows, so this is an indication that, all right, this could be a potential long, right? We're seeing this level, so even if we longed right there, let's say somewhere around this area, generally looking at the overall price pattern, that was a successful trade. This would be an extremely successful trade from about 900, riding this all the way up to about 2,000. Now, let's say we even just wanted to sell when price hit this overbought level, right? Even that would have been successful, not as profitable, and I would not necessarily immediately buy or sell depending on these conditions, right? We want to look for these particular setups and patterns and overall make sure that this aligns with what's actually going on in the chart. Interestingly enough, what we do see here, this is kind of gives credence to that. The stochastic RSI comes down, forms an even lower low, an extreme low, maybe about a reading of 10 in March, right? The beginning of March. And this coincides with the general dip observed right here. Now, even though this formed a lower low on the stochastic RSI compared to the lows seen in January, price was higher, right? Price was generally higher. So this was a suggestion that, hey, this was a good buying opportunity. So this is another example. We see price going up, forming higher lows, the stochastic RSI forming lower lows, indicating that, well, price is already going up. This is actually a hidden bullish divergence. We see prices going up, generally indicating that buying pressure is there. The rate of change is actually lowering, right? We see the rate slowing down from these falls. So this was actually another good setup, even just buying here, buying this dip at this particular moment. Let's talk a bit about the differences between the RSI and the stochastic RSI. So both versions of the RSI indicator are oscillators and are based on relatively the same data, right? Both RSIs are made up of price action and momentum, the rate of change, meaning that they tell you the same thing, but in different ways. And it's also important to remember that the stochastic RSI is based off of the RSI itself. It's just established, calculated through using a different formula. Now, many of these same RSI strategies that we spoke about before, divergence trading, RSI crosses through different conditions levels, these can apply to the stochastic RSI as well. Level crosses, divergences, general trends, right? If the RSI is trending in a certain direction and maybe a breach through that trend, the same thing can apply to the stochastic RSI. Now, it is important to consider the stochastic RSI is a more sensitive and faster indicator versus the RSI, meaning that while it may indicate more reversals, as we saw, it was much more volatile and went up and down much more frequently compared to the regular RSI. The stochastic may indicate more reversals compared to the regular RSI. It may also show more false signals that can mislead traders, especially if you're just trading off of that alone. You really want to make sure that you are not just looking at the stochastic RSI on its own. That's something to help build your case for a trade, right? You want to make sure that you're building your case based off of actually what's going on price itself, on the chart itself, not on just indicators. So here's an example of showing the stochastic RSI and the regular RSI side by side. So I have them both overlaid on this chart. This is Bitcoin on the 12-hour. And here we see a variety of fluctuations on the stochastic RSI, right? But generally we have a much more micro movements shown on the traditional RSI. Let's take a look over here. So this is October going into November. This is of 2021. We see Bitcoin form these, testing these all-time highs, breaking past 64K, and then forming a new all-time high at 69K. Now, at the same time, here we see overall stochastic RSI forming a high, stochastic RSI forming yet another high. Now, this may tell you, all right, well, this most recent high is actually higher than the one before it. So this still suggests that the trend is okay. We don't see any sort of divergence. We see a different story here on the regular RSI. We see a high observed on October 19th of this high when we reached 65K. Bitcoin came down, consolidated for a few days, maybe a week, and then came back up and ramped back up to 69K. At the same time, the RSI formed a lower high. Here we see a bearish divergence, right? The Bitcoin went up in price. We saw higher highs, and the RSI, we saw lower highs. So this could arguably give you a more actionable indication of what the general trend, as opposed to the stochastic RSI. Now, once again, this really depends on what you are looking for. Both are considered valid. Here we see, here's another example. So let's say price came down to this point. Here is the reading on the stochastic RSI. Price came down to about 56K and then fell down to about 53K. So 53K, that's another important level for Bitcoin. At the same time, stochastic RSI forms a low here, right? Forms this low, comes back up, and then forms yet another low above the midpoint, above the 20, indicating that this is functioning as some sort of level of support. We take a look at the regular RSI. At the same time period, we do see the RSI falls past this midpoint, indicating that there is some sort of downtrend on the horizon. Falls to the 30 level, as we see here. Bounces back up to 50, fails to really reach it. Here we see a real retest of this 50 level if there could be a possible breach. Ultimately is rejected. So this is another indication of a short position, right? This rejection of that center line. What's interesting here, these consecutive 3 lows, here's a low, here's a low, and here's a low, they seem to be consecutively higher right? At the same time, price continues to fall. So this was actually a good indication for a long. So let's say around here, if we go up at this particular part. So price came down to 53K, bounced back up to about 59. So this would have been a good long, right? Even if we were just following just based off of the RSIs itself. And, really even just looking at the Bitcoin chart, 53K is an important level. We see it acting as resistance here. It acts as support here, and it acted as support here, and then also acted as resistance as well when it came back up to retest in late December.